The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. From Alaska to Nebraska, Japan to Milan, Tanzania to South Korea, we love to come to you every day at this time.
The following takes place between 2 p.m. and 3 p.m.
So, what do we have going on here? Not much. We're waiting for bank numbers, I suspect, after the bell tonight. Man, are there going to be a lot of people on the wrong side? They all focused on one thing in the last pretty much 24 hours, and that was shorting all the financials. I guess assuming that they're going to have very bad news tonight. My guess is that they are not. We continue to sit on the upside of an uptrend line. I'd say half of all the sectors. Of the sectors that I follow, which is about 26. There's a handful of them that, about 2 or 3 that are below any trend line higher. There's 4 or 5 that are above the trend line. The other half, pretty much we came in this morning right on that trend line higher. So far, we're sitting on it without much ado. But we've got the bears out there with sinew and viscera. I think that viscera is going to be the word of the day. Viscera hanging from their teeth. They are sure that the banks have had it. But I have a feeling like Rocky, they're going to get up, dance around. Fed's going to, they may be a little sweaty. Fed's going to put a little bit of fire hose of cash on them, dry them off a little bit, make them look good. Things will get ahead. I don't think the banks are actually as bad as a lot of people think yet. That may be coming. Actually, they kind of had the idea that they may be having trouble already this year. Most of them had gotten their houses in order. It could have been a great deal bigger of a problem. But you know what? We're up 5 points in the S&P cash. Dow's up 25. NASDAQ is up 20. Again, not a lot of movement. Probably not going to see a lot of movement other than my guess is everybody yell all in on the shorting of the financials for the bank stress test news after the bell. But the problem with being short, why everybody else is short, is the downside tends to be limited. You've got a lot of people that will cover who probably shorted a little too early. And you don't get that huge kind of downside that we had in the end of February where nobody's short. So if you want to be long, generally what you can look at is the ability not to be that wrong. And if you are short, you're going to have to probably sit on your hands a long time before you get your money. So the old saying is the market moves money from the patient to the impatient. That reminds me of another joke. But as far as the sit rep, that's about it. We are on a fairly thin line. That line is higher or lower. But if you wanted to look at today as a push into lower prices, you would want to see more volume. About where we've been on 12 billion share days, about 7.2 billion shares at the moment. But again, I suspect at the end of the day, we're going to have everybody and their dog throw a log on the short fire, thinking that the market's ready to crack at any moment. I just don't see a whole lot that says if we do turn lower, it's going to be rapid and instant destruction. I do have a couple, I actually got 3 long positions, all looking fairly good at the moment. And if they turn down, I'll get out tomorrow. My guess is that I will be able to get out just fine without any major losses, and maybe even making some new stuff. But just some thoughts. Again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And of course, what else can you do? You can always put a message in the den. Okay. Anyway. Got some email here. Okay. Do what we have. Okay. Just looking at a few other things to see if there's anything out there. That's kind of it at the moment. Why don't we do a little history and we'll move on. There just isn't, like I said, in the sit rep, shorts are consumed by shorting banks over the last day. They've gone whole hog into it. If they are wrong, look for the market to probably pop back up to 3,100 tomorrow before the close. That's kind of what it looks like to me. Maybe we get a surprise, but everybody's expecting a surprise, and the market is fairly good at being the proverbial kettle that does not boil while you're looking at it. Risk reward continues to be as good as it can get if you wanted to short the market, sans the financials. I think you could make a case for that. I am actually rationally optimistic about higher prices, mostly in individual stocks, not so much the broad indexes themselves. I think they're going to meander around, and I would use meander as the word of the day, but I haven't been able to use eviscera in probably 10 years, so I'm going with that as the word of the day.
Then it's all just a little bit of history repeating.
On this day in 1981, Bill Gates and Paul Allen actually formally incorporate the company. This is right after they got a call by IBM, asking them to deliver an operating system for their IBM PC. Unclear on why they couldn't do it, but they didn't. And of course, that would soon change the fortune of Microsoft and the entire technology industry. If you're very interested in finding out how these original companies came to the BMOS that they are, I would recommend, and of course you want to invest in tech companies, I would really recommend reading Accidental Empires. It's from Kringley X. It is probably the best book to understand what San Francisco culture is like around technology, or at least Silicon Valley, even though they were a little bit farther north than that. Great book, though. And I've talked to Kringley many times over the years. We'll be back after this.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we'd like to welcome to the microphones again Tim Ord from the ord-oracle.com. Tim has had a newsletter over 30 years. How many years has it been?
Yeah, since actually it started really in 1989, so however many years that is.
So 31. I knew it was close to 30. So yeah. 31 going on 32.
But the first year was pretty slim. It didn't have many clients, but officially I started in 89. So
okay.
But
well, you got to start.
One of these days I'm going to get the hang of this and be actually.
Eventually, it is kind of like doctors where they practice. They never say that they're an expert, do they?
Yeah,
so,
that's right. Yeah, this is a lot. Yeah, you're right. You gain a lot of knowledge, but there's so much knowledge to learn that you never really run out, running out of the learning curve, I guess you might say. There's always something new around the corner that adds to your trading abilities. So,
well, hopefully everybody can learn something from that 31 years that you spent writing newsletters. We've got the first chart up here for you. It's ADV SPX, so that's advanced decline and summation index. And what is this down here? Advances and declines. Okay.
Yeah. Well, anyhow, this is pretty interesting. All those red lines are times when these two bottom indicators were triggered. And the bottom indicator is stocks above the 50-day moving average. When it gets above 90, usually, if you notice that most of those that red lines come off the bottom of the market. And that's a confirmation that the rally is going to continue. You may have some mild consolidations, but normally that's a sign of strength off the bottom, and that's what you want to see. And it's bullish for the at least intermediate term for the next maybe month or two or longer. What's interesting here, this indicator never triggered until like a couple of weeks ago. So this never triggered off the bottom. It just triggered, probably looks like about end of May, 1st of June. And that's what's kind of unusual about this. We did have a sign of strength pretty much going into the short-term June high, which is unusual.
Can you
what does that mean?
Go through a little bit more of the details of what this signal is and say it again maybe slowly?
Okay, well, it's stocks above their 50-day moving average. In other words, that red line, we're talking if we got this chart up, I don't know if you do or not, but anyhow, the red line is stocks, in other words, of all the stocks in the S&Ps, 90% of them were up above their 50-day moving average. So that last rally up from the March 23rd low, 90% of the stocks went above their 50-day moving average. In other words, that was a huge participation on a short-term basis. So you pretty much bought anything at the March 23rd low, you had a 9% chance of making money because 90% of the stocks went up. So that's what that says. So if you had enough guts to buy that, you made money on it.
That huge sign of strength, the huge actually leaning toward the advancers and decliners, puts it in, and you think that is a good sign that you have at least 30 days or longer of bullish market action.
Yeah.
Okay.
It's well, what I'm thinking here. Let me go a little bit further here with this. It's just because it's a little bit unusual what's going on, in my opinion, anyhow. The next chart up is a 10-day average with a 2-to-1 breadth thrust, and this is what's that guy? I can see him. I can't. But he came out with a breadth thrust, and you want to see that coming off of a bottom, and that gives you confirmation that a rally has started. It's kind of like a sign of strength off the bottom. This is instead of using stocks, he uses a breadth thrust, which is volume, and that also happened basically pretty much to the June high. But again, it didn't come right off the March bottom. It came in late May, early June, which is a little bit strange. If you go back and look at those red lines again, a lot of those are right off the bottoms. And here, even back in that January 2019 rally, came right off the bottom, really confirmed that this market was going to go higher. Here, we got 2 months after the bottom, or even 3 months after the bottom, we're seeing this big surge in volume and also in price. And right smack at the highs, kind of a reach and exhaustion move. So what I'm thinking, there is going to be a consolidation here. I'm thinking this is probably, since it didn't come right off the bottom, it kind of came at the end, the short-term exhaustion move to the upside. It's bullish longer term, but on a short-term basis, I think it's just kind of run out of steam is how I interpret it. So I think there should be a consolidation here for the next month or two. Then we start another run up.
There's a red line right around 65. What does that symbolize?
65.
On that percent stocks above the 50-day moving average.
Nothing.
Okay.
I don't know what that line's doing there, but it's there.
Okay.
So
that's
I don't know what
fine.
that means.
As long as we know it means nothing, we can move on. Won't keep me up at night.
It means that. The 91 is really important. When it gets up around that 90 range, you got a strong market going. So what I'm saying is, with 90% of the stocks above their 50-day moving average, we're not that now. But it doesn't sound like we're going to crash here anytime soon. I think we're going to consolidate, but not. I don't think we're going to go back down to the March lows. I'll put it that way.
What would change your opinion? Back up a retest of 3250-ish on the market and a failure up there? Is that what you would probably be looking forward to?
Yeah, I'm thinking. I think we go up and test the recent highs. I don't think we get through them. Then we can't get through that. We may fall back or something. I got a Fibonacci retracement level going on there. I think the worst case scenario is a 50% retracement, which is around 2,700. I think that's the worst case. We might find support around 2,800, which is a 38.2% retracement. But the March low, I don't think it's the way the statistics are coming in. We had some strength, coming off, even though the strength was late. We did have strength coming off the lows, both in volume and price. That doesn't usually happen where the market goes back down, tests the low. And also, we retrace about 90% of that previous decline, that February, March decline. So Fibonacci-wise, probably the worst case scenario is a 50% retracement here. So that's what I'm thinking is going to happen. We got seasonality going on here too. July season. Of all the months of the year, July is the, I think it's the 10th worst month. So there's 12 months in a year. July is the worst, 10th, and the next one is September. So July through September, the market might kind of turn to garbage here. That's what I'm thinking.
Okay. We're going to be back in just a few minutes with Tim Ord of the ord-oracle.com. And we'll show his book when we come back, because I really enjoyed it.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back with Tim Ord on the line, and we'll say his book here, The Secret Science of Price and Volume, circa 2005, 8, something?
2008.
2008. I kind of vaguely remember. I'm glad to remember what I had for lunch yesterday. Okay. What are we on to chart 2 now?
Yeah, chart 2.
Okay.
This is individual American investors or something. It's what the American Association of Individual Investors bull-bear ratio. and it's a 3-period average, not because this is a weekly chart. And this is current as of today. The red lines moved a little bit on my chart, so they're not exactly lined up. I don't know what happened there, but if you notice, whenever you get down to 0.75, current reading is 0.63, you're not usually at any significant top. So this chart's basically longer-term bullish. The only time it didn't really matter, if you look back in 2008, it got below 0.75 a bunch of different times, and it didn't matter. Market still went down. But ever since 2008, every time it got below 0.6 or 0.75, intermediate term wise, you're usually near. Anyhow, this projects a longer term low. I'm not saying at least that March 23rd low suggests it was a longer term low, and it's still down there. So we can have short term corrections, but you're not going to have a 39% pullback like we did in March. But we can have a 50% pullback. So this is a longer-term bullish sign. I still think we'll consolidate in here, and we may have a minor pullback over the next several weeks or even a couple of months. But there's no significant top developing here, according to the American Association of Individual Investors Bull-Bear Ratio. So, I wanted to show you that. So this is kind of all clear sign longer term. So that's what that suggests.
So that's just a 3-day moving average.
Yeah. It's actually, this is a weekly chart. It's a 3-week.
Okay.
Yeah.
So it's 3
it's a
weeks.
longer-term view. So that you can't day trade off of this thing, but you can month trade off of this, I guess. But this suggests longer term is pretty okay. And again, this chart goes back to about mid-2007. And over the years, it's worked pretty well. So, when it gets up above, 0.2 or 2.5 or something like that, usually that's pretty dangerous. But obviously, we're not even near that. So, individual investors, what that says, they're pretty nervous about the market. So, and, old Joe Granville, the wall of worry thing, that's what that says. The individual investors have a wall of worry here. They're not convinced that the market can go up here, so which is good because you want that wall of worry to be present for the market to go up.
Did you ever?
The individual
I take
investors usually buy at the end. So,
did you ever meet Joe Granville?
No, never did. I still talk to Don Wallenchuk, which was his mentor.
Right.
But I never met Joe. I don't think he's alive anymore. Actually, I did. Yeah. I did. I went to one of his seminars back. I forgot all about it. And he got a puppet on his leg, and he talked about this puppet, and he talked about fear, and you buy in fear and stuff. And he was on stage in Colorado. I was a stockbroker in Colorado, and he gave a free seminar, and probably this whole place was just packed. Packed to the hilt. Probably 2,000-3,000 people in that stadium. It was inside. And he got up there, and he had this puppet on his leg, and he talked, I think, for about 3 hours. Nothing about technical analysis. It was about you buy in fear, you buy in fear. And it was kind of a weird presentation, I'll put it that way.
Well, he was famous for coming out of his casket at many of them, but I just knew him way before I ever got involved in investing. And the deal was we were putting and installing a big audio video system in his computer, and he put a piece of Lexan right under, about a 1/4 inch under the water in his pool, and he would walk across it like he was walking on water when people people he wanted to impress would show up. I just always thought it was interesting, but he was quite the show.
Quite a character. Yeah, quite a character. Yeah.
Anyway, okay, we're on to chart 3 here.
Chart 3, this is a short-term kind of an indicator thing. And what it is the equity put-call ratio readings with the 21-day moving average. So it's not a day, so it's 21 days. So that's like a month of readings, and this chart goes back to 2005, thereabouts. And every time it got down to below 0.55, we're at 0.49 right now. And the market, you had some minor declines, back in 2018, it picked that top, went down. Looks like a decent percentage, maybe 10, 15%. It came early or it came in probably late 2020, probably looks like about December sometime, and that put in that 38% retracement. And we're back down there again into kind of an area where, there's probably some sort of a high, either market goes sideways here or has a pullback. And so on a short-term basis, over the next month, I would say, market upside is probably going to be limited, very limited. So I just want to point that chart out. So that kind of goes along with seasonality. July and July, August, September are not, seasonality-wise, is not the best months to buy in, I guess. September is, because that's where the low really is, the final lows a lot of times. So this suggests kind of a dull summer pullback or some sort of a consolidation. So that's what that implies. So,
well, we've got about maybe 30 seconds left. Any thoughts on gold up here as it kind of just tickles the top?
Yeah, July 4th, the gold markets a lot of times have reversals around the July 4th time frame. So I'm thinking the market consolidates into the July 4th time frame, which is, next week after. So nothing big. Intermediate term, I'm bullish. Short term, I think it's just a lot of nothing. Nothing real significant to the downside, but more dullness. And after the July period, I think another rally starts, probably runs into September. All high is high. I think we turned the corner. We had the bear market from 2011 down to 2016. And from the 2016 low, we went up really good in the beginning of most of 2016, but since then it's kind of been dead. And I think the lively part is going to start, probably in August or sometime. So,
well, I want to thank you, Tim, for being on the show. We'll have you back in a couple of weeks. As always, Tim Ord, at the ord-oracle.com. We want to thank you for your opinions, and we'll see you in 2 weeks.
Thank you.
You bet.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And you got plenty of time to give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, you can always put a message in the den. And we're going to look at a handful of charts. Gap up on Abbott Laboratories. This was back on the April 14th. Up on about 10 million shares. Started to get into it yesterday with 6 million shares. You're doing about 4 million shares, and it filled that gap today. That's actually a double gap. And that's when I look at these, I really pay attention to them. They tend to be very accurate at actually pointing out just where the support comes in. This one didn't quite get it, but it was, 20 cents higher than the overlap of these two previous gaps. The first gap occurred back on the 24th of February. And you get these double gaps, and they tend to be fairly good at pointing out support. Anyway, a huge move higher in Abbott Laboratories, a nice low volume pull back out here into this gap today. And you can just look at the bars down below, volume bars, and see just how well this thing tapered off on the right-hand side. Anyway, one of the better looking charts out there. See what else we have. A lot of other stocks coming in the healthcare biotech sector into previous double gaps. Here's another one, ACHC, which is Arcadia, gapped up on 2.2 million shares back on May 5th. Tested it with 820,000 shares on June 15th. Into it yesterday with 500,000 shares. Today, 506. As I said, I like it when it's very close to where both of these gaps, both a gap up and a gap down, the gap down from May 1st and then the gap back up on May 5th. That generally is where you want to put out your bait. About 23.50, 23.25. If you would get that and we continue with light volume, that's going to be fairly decent support. AIG, same kind of thing, gapped higher with about 8 million shares back on the 26th of May. Actually 8.4. Came back into it yesterday with about 6. Today we're doing about 3, and you may have actually seen the reversal. This one's not as good as the other ones, or at least not as clear. Even things like some of these airlines are now coming back to these gaps. This is another one from the 26th of May on 4.6 million shares on Alaska Air Group, ALK. Like I said, 4.6 million shares into it with about 2 million shares today. I still wouldn't be a fan of buying airlines, but that may tell you a little bit more about how the volume's coming in. We talked yesterday about Hertz being able to sell a lot of its cars to the AutoNation, and the other big, huge chains of retail car sales and used car sales. This may be eventually a very good thing for Avis, as they may be the last person standing when Hertz actually does end up in the ash bin of history, and probably a little viscera in that ash bin. But you can certainly see the last major low was June 11th for Avis, about 9.1 million shares. And you got about 2.6 million shares. Now, you want this to close back above 2160 to, what do you got now, 2178. So you're looking pretty good here. I don't think, again, it would be something I'd invest in. I think there's probably better, faster horses out there. But if you can't beat up on a Avis today, that's telling you a little something. Now, tomorrow, that still holds. I probably wouldn't be diving in front of diving on hand grenades or in front of tanks today. But if you were going to add positions after we get the bank news after the bell tonight, I think that might be kind of interesting. A little bit of uranium news out here. Cameco actually came off the lows very well after in the, what is that? The March 18th low, $5 to $11, which is pretty nice. It has come back fairly nicely in lighter volume. It may need one more round, but it certainly looks like this I'm going to say a little higher than mid $9 area has been acting as support. May 19th, $9.71 with 3.6 million shares. Yesterday he had 2.9, so he dropped by about 400,000 shares. That kind of makes me think you get one more bounce and then the pullback, and that low comes in with like 1.5 million shares or something. That's probably where I would bite. But not much in the way of juice today, but it is holding above the $9.71. It may need one more move out here. Okay, checking the email. Okay. What else do we have? Cody. Yeah, what else can you say about this other than the Kardashians once again have cashed in with little or no talent? And you're back to at least support, $4.16. Got to $6.27, but who knows? But they've rang the register, and that's all that matters to the youngsters today is how the Kardashians are doing. So I put that in. To CrowdStrike, had a question about this. It has gone and broken through. You wanted a little bit more juice, but you did get the big pop on 21 million shares back on the 3rd of June. I was very reticent to be in this. Of course, a lot of political issues with it and the Ukraine, but those seem to have blown over. But a breakout. You've got volume. You want a pullback to 101.88 on like 1 million shares, maybe 500,000 shares or something like that. And that would be the next swing or bite at the apple for that. In fact, why don't we look at Apple since we're talking about it? Is there anything going on in Apple is the question for Joseph. And basically, you've come back yesterday with about the same volume you had at that 372 pop. You got nothing but a doji out here today on lighter volume. So if that doji is a halfway move, basically tells you you're coming back to mid 350, maybe 355 or something. Of course, that doji could be the move end of the move down. I can't see a lot of reasons to short Apple. But you know what? People have differing opinions. To me, if Apple's going to do poorly, then Skyworks Solutions, SWKS, right? If I can actually type it correctly. Skyworks Solutions going to, if Apple gets the sniffles, Skyworks Solutions is going to get Ebola. And pretty light volume on the downside today. Just looks like it's facing out, trying to retest the 122.83 low. of June 15th. That had 2.4 million shares. You get 733,000 shares today. We'll be back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, BAM! As well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we get ready to wind up the show and Tom O'Brien take us into the home stretch, I got a question from Wayne asking about Shopify and Tesla. Have they really started quit shorting it? At least on the daily basis, the answer is no. Still, every day, about 30% of the shares of both Tesla and Shopify are being shorted. And that doesn't mean that the stock doesn't go down. What it means is, as I said earlier, when everybody's short, the best you can kind of hope for is just to sit on your hands and get a long slide. The real money, the real fast money, is what you got in the end of February when no one was short. There was nobody there to buy it. And, of course, everybody just stands back. In a market that's heavily shorted, you got a lot of people wanting fast money, some people wanting middle money, some people waiting for the whole thing. And if you're the guy waiting for the whole thing, well, you're going to have to wait a while. You're going to have to sit through a lot of huge reversals, that kind of stuff. It's just a much more difficult short selling proposition, as many people are interested in different time frames and what they're going to get out of it. Of course, every time they cover means that you probably have the ability to get a little short squeeze that you have to sit through for the next 4 or 5 days, and that's always the thing. I like to short when there's not a lot of other people shorting, or on a stock that a lot of people are not talking about. If everybody's talking about it, if it's on CNBC, it's always a knockdown, drag out. Donnybrook, as I mix my metaphors once again to win the metaphor trophy here at TFNN and the digression award, which are now, I'm pretty much sure, mine in perpetuity. I'll probably have the wing of digression and mixed metaphors at the TFNN Institute. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow with news of how that banking went.